Welcome back to Investing Talk Podcast. Today, we're diving into the sources you sent us about a really interesting and very new company, FIGR Technology Solutions. And our goal is pretty straightforward, trying to answer that question. Is FIGR Technology Solutions a good buy right now? Looking at a company that just went public, it's always tricky. You've got the buzz, the excitement. But we really need to look at the fundamentals, the actual numbers, and weigh that against, how the market's feeling, especially for something this fresh.
Exactly. FIGR Technology Solutions, it's essentially a consumer lending platform, but built on blockchain. That's the key difference. And their IPO was, September 12th, 2025, so we're talking less than a month of trading history. Analyzing a stock this, unseasoned, as you put it, it's navigating a lot of unknowns.
Totally. Okay, before we really get into the weeds here, just a quick reminder for you listening. If you find this kind of analysis helpful, please do subscribe, maybe hit that like button, and definitely leave us a comment. And yeah, if there's a specific company you're curious about, one you want us to look into, just drop it in the comments below. We really do build these discussions around what you want to hear. All right, let's unpack FIGR Technology Solutions. Where do we start? Probably financial basics, right? Get a feel for the foundation. Looking at the numbers ending June 30, 2025, that's the trailing 12 months, the TTM, we're seeing TTM revenue of $327.24 million.
Okay, decent top line.
And TPM net earnings came in at $61.94 million.
Which gives us, what's the margin on that?
That translates to an 18.93% net profit margin. Pretty healthy on the face of it.
Yeah, 18.93% is definitely solid, particularly for a fintech that's probably, pouring money back into growth in tech.
Yeah.
But we have to talk about that that really weird number in the sources, 100% gross margin.
Yeah, I saw that, 100%. That immediately jumps out. How is that even possible? No business has zero cost of goods sold, right?
Right. It sounds impossible. The sources do clarify, though, it's likely due to how they categorize revenue because they're a blockchain platform. They're probably booking platform fees or transaction revenue before major operating costs like tech development or admin overhead are factored in at that stage.
So it's more of an accounting thing for this kind of platform, not a reflection of zero operational costs.
Exactly. It shows the platform can generate revenue very efficiently at the transaction level, but it's not the whole picture. We should also note that TTM operating profit was lower, $56.72 million. That feels a bit more grounded in reality for judging overall business health.
Okay, that makes more sense. So decent profitability, but using historical data because they're so new. Is there any forward guidance, anything the market can use to project future earnings?
No, not really. That's the thing with such a recent IPO. Reliable future projections, official guidance from the company, it's all marked NA. Not available. Investors basically working off the financials that were in the registration statement from September 10th, just before the IPO. So the stock's trading heavily on past performance, yes, but maybe even more on the story and the future potential, not confirmed forecasts.
Right, which sets up that classic battle, innovation and potential versus just sheer uncertainty. Okay, let's pivot to the balance sheet then, because the sources highlighted some serious risk there, particularly with leverage.
Oh, absolutely. The debt-to-equity ratio. It's 181.1%.
Wow.
Yeah. The consumer finance world, that's really high. It signals a lot of balance sheet risk. If lending volumes dip or interest rates move against them, servicing that much debt could get stressful fast.
But didn't the IPO just bring in a ton of cash? The sources mentioned that as a kind of counterweight.
It did. And that's the crucial tension here. The IPO raised a massive $705.8 million. That definitely bolsters their cash position, their short-term liquidity. It gives them runway to handle debt payments and fund growth for now.
For now. So the question is this high debt just a startup phase thing, or is it baked into their model?
That's exactly the question. Does their model, which needs big upfront investment in blockchain tech and probably significant capital for lending, does it just require this much debt to function and scale? Because if they burn through that $705 million quickly, they could find themselves in a tight spot again. That IPO cash is a one-off boost.
A one-time fix for a potentially ongoing issue. Got it. Okay, so what about their competitive edge? The whole pitch relies on their tech being better, faster, cheaper than rivals like SoFi or Upstart or even traditional lenders. What's the specific advantage?
Well, the core idea is their first mover advantage, using blockchain for the whole lending process, origination, servicing, even selling loans on the secondary market. Theoretically, blockchain can cut out a lot of the middlemen, the paperwork, the compliance friction, the counterparty risk you see in traditional finance.
So it's about efficiency. They could potentially do the same loan operations, but just cheaper?
That's the promise. Lower structural costs, plus the ability to scale up operations much faster and more easily. But, and this is a big but these advantages are still mostly theoretical or at least unproven at the kind of massive scale needed to really disrupt the big players. And they also have to deal with the whole regulatory side of using blockchain in finance, which is, let's just say, still evolving. Very uncertain.
Okay, so financials give us a baseline, tech gives us the potential story. But how has the market reacted since the IPO? Let's look at the technicals, the price action.
Well, the market reaction has been, frankly, explosive.
Yeah.
It really confirms that speculative, high-potential narrative we talked about. As of September 19th, the price was $43.18.
And the IPO price was $25.
Yep. So in just over a week, the shares returned something like 38.78%, a huge jump right out of the gate.
That's a massive early run. Are traders seeing any key levels emerge yet, like resistance or support?
They are, yeah. There seems to be some resistance building around the $43 to $44 mark. Getting cleanly above that might signal more upside. On the downside, traders are watching the $39 to $40.50 zone as potential support. If it breaks below that, some of that early enthusiasm might cool off.
Now, normally we'd look at things like moving averages, MACD, RSI, but for a stock this new, what do the sources say about using those tools?
Basically, they say don't bother. Not yet, anyway. Reliable technical indicators are pretty much NA not applicable. There just isn't enough trading history. Trying to use them now would be like guessing a car's fuel economy after driving it just around the block. You need more data, more road.
Makes sense.
And that reported beta of 0, which usually implies low volatility. Forget that, too. It's just an artifact of the short history. It's bound to change. The sources describe early trading as volatile, and that's likely closer to the truth. People are trading news and momentum, not established chart patterns.
Okay, so if technicals aren't much help yet, let's talk news flow and catalysts. What's driving the sentiment? The sources mention there's 0 formal analyst coverage right now.
That's right. No big banks or research firms have initiated coverage yet. So the price is really being driven by, early investor optimism and speculation, not external analysis.
Which makes insider activity potentially even more significant, right? What's happening there?
And this is where a potential red flag pops up. According to the sources, in September, right after the IPO, insiders, including some top execs, sold about $500,000 worth of shares collectively.
Oof! Selling stock literally days after going public. That doesn't look great, does it?
No, it raises questions. Look, $500,000 might not be a huge amount in the grand scheme of the IPO, but the timing is what catches the eye. It makes you wonder about long-term alignment. Are they cashing in some chips while the hype is high? It's something potential long-term holders would definitely notice.
Yeah, definitely raises eyebrows. Okay, looking ahead then, what are the key dates or events that could really move this stock? Inject some volatility or opportunity?
There are 3 big ones highlighted in the sources. First up, Q3 2025 earnings. That's expected around October 4th. This will be their very first earnings report as a public company. Hugely important for setting the narrative.
First public report card, basically. What's next?
Second, October 18th. That's when the S&P and Nasdaq have their ETF rebalancing review.
Okay, explain why that's such a big deal for a newly listed company like FIGR.
Well, if FIGR gets added to major indexes like the S&P indices or Nasdaq-related ones, all the index funds and ETFs tracking those indexes have to buy the stock. It triggers automatic, forced buying, potentially millions of shares, regardless of the price or the company's fundamentals at that moment. It's purely a structural demand driver.
So it can create this artificial buying pressure, pushing the price up.
Exactly. Significant upward pressure and adds a lot of liquidity. It can really shift the stock's early trading pattern. It's a technical catalyst, pure and simple.
Interesting. And the third key date, something about big investors.
Yes, the 13F filing window. That opens around December 1st. 13F filings are where large institutional investors, hedge funds, mutual funds, endowments have to disclose their holdings. So this window will give us the first real glimpse into whether any big, influential money managers decided to take a position right after the IPO. Seeing some well-respected funds on the list would be a big confidence booster for the market.
Got it. Beyond those scheduled events, new stocks often trade on rumors and speculation, too. What kind of chatter are the sources picking up?
There are a couple of persistent themes. First, there's talk about a potential strategic partnership, maybe with a top 10 U.S. bank. If a major bank were to adopt FIGR's blockchain infrastructure, that would be huge validation for their technology. Transformative, really.
Okay, that makes sense. What else?
Second, there's speculation that FIGR could be an acquisition target, maybe for a larger international fintech firm looking to buy its way into the U.S. market with cutting-edge blockchain tech.
M&A buzz. Always gets the market excited. Anything else?
Yeah, one more thing folks are watching is share supply. Specifically, the possibility of more lockup expiries. If more shares held by early investors or insiders become eligible for sale in the coming months, that increased supply could put downward pressure on the price, even if the news is generally positive.
Right, the classic supply-demand pressure. Okay, let's try to pull all this together. For the listener who sent these sources, what's the overall takeaway? The sources give FIGR Technology Solutions a rating of 5 out of 10, smack in the middle.
Yeah, and that 510 really captures the essence of it. High risk, but potentially high reward. On the plus side, you've got genuinely innovative technology, that decent 18.93% net profit margin we saw, and importantly, that big slug of cash from the IPO. Story is compelling.
But the risks are just as significant, pulling that score back down to neutral.
Absolutely. The big negatives are, one, that extremely high leverage, the 181.1% debt to equity. Two, it's just a completely unproven stock, no real track record, no analyst coverage yet. And three, you have those underlying, still unresolved regulatory questions around using blockchain in the heavily regulated world of consumer finance. It's a disruption play that still needs to prove it can work reliably and within the rules over time.
So given that balance, what's the recommendation from the sources on when or if someone should consider buying? What's the investment horizon?
The sources are really clear on this point. Right now, FIGR Technology Solutions is considered suitable only for speculative short-term trading. It's for investors who are comfortable with really high volatility, who are playing the news flow, the technical catalysts like index inclusion, maybe those partnership rumors. Quick potential gains, but also quick potential losses.
And definitely not for a long-term portfolio yet.
Definitely not. The sources explicitly state it's not suited for long-term investment at this stage. For that, investors really need to wait. Wait for the company to build a consistent performance history, show they can manage or reduce that debt sustainably, and actually validate the benefits of their platform through several positive earnings reports. The risk-reward just isn't there yet for patient long-term capital. And maybe here's a final thought for you to consider building on all this. Forget the quarterly earnings noise and the index games for a moment. The really big, long-term question for FIGR Technology Solutions comes down to one thing. Will blockchain technology truly get widespread adoption and clear regulatory acceptance in consumer lending? If regulators give it the green light and the efficiency gains prove real, FIGR could be revolutionary. If adoption stalls or regulators clamp down, that core tech advantage might just evaporate. That's the fundamental make-or-break factor down the road.
A really crucial point to end on. The whole thesis hinges on that broader tech and regulatory trend. Okay, that wraps up our look at FIGR Technology Solutions based on the sources provided. Thanks again for tuning in, and we'll catch you on the next one.